Welcome back. You're watching The Money Show on ET Now. This is the period after the end of the financial year 2020, that's March 2020, when companies start issuing annual reports to all of their investors. As the name suggests, it's issued out annually and gives a statement or a report of all the activities conducted by the company in the year gone by, which in this case will be 2019 to 2020. Now, unlike the previous years, I'm sure many of you all have got your annual reports via email as opposed to the usual post that you give. But the question is, how many of you all actually read through the annual report, see what the company is trying to tell you, look at the P&Ls and the balance sheets for the entire year? Well, my guess is not many of you. Your excuses could be plenty. You may not be having time, which by the way is no longer much of an excuse. Or secondly, you may not be having the financial capability to be able to understand many of the terminologies, many of the jargons that sometimes in these annual reports do tend to throw up. Well, I'll try and help you de-jargonize some of these annual reports terminologies, and more importantly, help you identify what exactly are the sections in the annual report that you absolutely must read and which ones could sound off a red flag in your investments. For that, I have with me noted investor and somebody who's been doing this for the last many years, Abhimanyu Sofat, the Vice President of Research with IIFL. Abhimanyu, a pleasure having you with us today on The Money Show. Thanks so much for giving us your time. So let's split this conversation up, because obviously, reading an annual report is not something that just simply takes you a couple of minutes. But unfortunately, we have that much amount of time to talk about that. So for the sake of convenience, let's split it up. When you first open the annual report, Abhimanyu, with all of the experience behind you, what is the first thing that you tend to look at when you first receive it, in your mailbox or in your post?
Mubina. So, annual report reading is a great activity which I feel doing, especially over weekends. Now, the reason for that is, you tend to understand so much about a company which you normally don't read in a newspaper or, from a management interview. The investor presentations also that come, they don't cover the kind of information which is there in the annual report. Now, for the first, what one needs to look at when he opens the annual report is the chairman's message. What is it exactly that the company wants to tell its investor? Is the core theme of this particular company in terms of their focus area? How did the year go around? And what are the main initiatives of the company, which one gets through the chairman's speech? After that, there'll be typically a CEO's message as well, in addition to the chairman's message. And then you obviously have the director report, which talks about, what the different segments of the company, how they did. So a lot of information which is quite meatier for some analysts to understand. Like, for example, something related to the production, how much was the production, or if they've done some new initiative, what is the kind of cost saving that they have got from that. All that kind of information comes through in those chapters that one see in an annual report. Post that, we look at the vision of the company, which is critical, in terms of the overall thought process of the management from a 5-year perspective. And then we look at the other aspects of the company.
Okay, so let's start off with something that we notice in the first few pages, and that is management discussion and analysis. Like you mentioned, you have vision, mission, all of these, statements that come right in the first few pages. They are mostly qualitative in nature, the management discussion and analysis section. What do you, make out from that? What do you read from that? Because, Abhimanyu, to be frank, obviously, if it was my company, I would like to give a very positive outlook as well about my company in the annual report. Why would I want to paint a negative picture, right? So, Abhimanyu, how do you spot the telltale signs of maybe some trouble brewing in these sections?
So, what we look at generally is, in those sections is like a company has different segments. Then how is it that the different segments are performing? That is one critical thing that we look at in that particular section. What we also look at is that, if there is some information with regard to the segmental numbers, which is available in terms of, how certain segments have contributed to business and which are the growth areas for a company. CapEx figures are also sometimes mentioned in terms of new plants being set up. There's information related to some sale of property which would have happened, or something which is which could have brought in a lot of cash flow for the company. Figures with regard to whether these businesses focus more on the export side or on the domestic side. So these are some of the critical information that one needs to gather from these initial pages of the annual report. If the company's numbers are very good, then we also find that in the initial phase only the company talks about certain aspects like dividend going up, the ROE of the company going up, how the profitability has improved for the company over a period of time. So I think that these are some of the key things that one needs to look at. In addition to some of the starting information, which could be like board of directors, that what is the board of director composition? Are they meeting all the guidelines? Who are the people behind the company, and what is their background, as well as knowing about the pedigree of the board of directors as well.
Pedigree of the board of directors, I understand that would also mean, like Abhimanyu mentioned, the background of the management, because at the end of the day they are the ones that will be leading your company. You're the shareholder, so they will essentially be working on your behalf to lead the company towards a profitable future, and hence their vision for the company does essentially attain the utmost importance, and that's the reason why it's important for you to essentially go through that bit of the information as well. You mentioned something on board of directors compensation too, Abhimanyu. Is that given in the annual report as well? Because I would also want to know, since this is something that many a times retail investors don't really participate in, right? That how much does a particular director make from the company? These are really board related decisions, or the management remuneration committee decisions. Where in the annual report can I find such information?
So absolutely, there is a separate section in the annual report which talks about the entire money which has been given to the board of directors, as well as the key KMPs, which is basically the key management people. If there is a salary growth which has happened for certain key management people, then a justification also has to be given that what is the average salary which the organization as a whole has given. And if the salary of key management person has increased more than that, then there has to be a reason which has to be put in the annual report, that what is the reason why that has been done. So that really helps. In addition to that, just to add on to the management point, is there something in terms of some loan being given to a key management person or the board, one of the people from a board of director, any rent being given to one of the people for any property that they would own, any commission for some consulting assignment that would be given, any shares being given as a sweat equity to these guys, or normally all those kind of disclosures need to be there. In fact, what we've seen also is sometimes which is an information sometimes which is available in notes to account. Sometimes we have seen in large corporates who have multiple companies, ICDs being issued, which is intercorporate deposit, where one of the other companies or promoters is being funded by funds of this company. So a lot of that kind of information is also available in the annual report.
Okay, now let's move to the bit more trickier part, and that's financials. P&L, balance sheet. For many individuals, this can be sometimes pretty daunting, especially if they don't have a financial background. So again, here also I would like to break it up into three of the biggest or the most important financial statements. There's of course notes to accounts, etc. as well, which form a part of these three statements. But there's P&L, there's balance sheet, and there's cash flow. Many a times we give a lot of importance to P&L, but balance sheet and cash flow too are extremely important, if not more important than the P&L. So let's start off first with P&L, Abhimanyu. When you do have a profit and loss statement in your hand, you of course must be having that art of getting numbers to talk. But for an individual who really does not have that knack, how would you advise them to start off? What would be some red flags you would ask them to identify?
I think so. First of all, one of the simple thing which a retail investor can do is when they look at a particular company, they also look at, what are the numbers of the peers in the industry. And if they find that there is a very large difference in that, A lot of time there's a common statement which can be made, which is basically that my depreciation cost is 7% of sales, whereas someone else depreciation cost is say 2% of sales. So what is the difference? Why it is a difference in that company? So broadly speaking, first let's focus on seeing whether there is some unusual trend relative to industry, because every industry is different. Now coming to some of the other details in the profit and loss statement, the first thing is on the revenue side. One needs to look at that whether what revenue is being booked, is it coming to cash flow or is it going to inventory and debtors? That is something very important to look at, because we have seen some companies where some corporate frauds have happened. That the revenue number is shown and then the debtors have increased. Other thing to see is if the revenue number has increased, has there been a significant increase in purchase of traded goods rather than actual raw material coming in and value addition happening. So if we see that happening, then clearly it shows that what company is doing is they are just doing trading and they are actually not doing any economic activity. So we are not sure whether the numbers of that company are good or not. Third component would be something like in the salaries part, are they paying PF or not? Are they paying salaries to people? So I recall, one leading company which was more into, healthcare equipment. Their cost, their salaries that they were paying to their employees was significantly lower than what the industry average was as per the annual report. So that was something which was very interesting for us to look at. A lot of companies has huge increase in salaries, but they don't have PF being paid. That is actual money to be paid. Power cost. Power cost is actual money that you need to pay to a state electricity board, right? So some companies, you can't fake that unless you make the payment. So these are some of the line items that I tend to look at, before the operating profit in terms of looking at a company. Then obviously after that, you look at whether the depreciation is in sync with the industry. I've seen that in case of say an auto ancillary company which had a huge capex plan, but depreciation increase was not commensurate. So it was kind of that they were managing the P&L. Interest cost to debt, is it good enough relative to what the industry average is, and if there's any difference, so what is the reason for that? The next point is obviously on the taxation. Are they paying enough tax? So there's is the number of tax which is paid in the P&L similar to a cash flow number that you see in the cash flow statement? There could be some reason for changes on that. But broadly speaking, whatever number should come in the P&L over a period of time, that should get reflected in the cash flow as well. So these are some of the critical things that we need to look at from a P&L perspective. And obviously, you will always need to have an eye on the contingent liability thing which comes in the notes to account, where if you find some item which could be either related to P&L or balance sheet.
Okay. Another very important statement, if not more important, is cash flow statement. Abhimanyu, I'm sure you'll agree with me that sometimes what the P&L does not really reveal, the cash flow does. So if you could talk to our viewers about the importance of that one, how they could as well understand the true picture from the cash flow statement.
So, Mubina, the critical thing is that in the cash flow statement, since you add back a lot of the, non-cash items like, depreciation and all, so lot of those charges are added up. It gives a better reflection of how the business has happened. The reason I'm saying that is because, say, a company's sales have got converted into debtors, inventories. A lot of that information gets captured in the cash flow statement. So ultimately, when I'm looking at the free cash flow and we see how the movement of money has happened, typically I would want a company to have a very strong cash flow. I want to see a company where the working capital as such is coming down in terms of the overall mix. Your net working capital days should be going down. That should be, for most of the companies, is the focus area that we would be looking at. Again, in terms of investing, how much money that they are putting in terms of investing. That is another thing we are looking. And then obviously the financing part of it, that what is the way that the financing of that has happened? Is it happening through the P&L or is it happening through raising of money, through raising of equity or through raising of debt? So a lot of those kind of critical things are known through a cash flow statement, which ultimately tells us that how authenticated a balance sheet or a P&L is all that can really happen if we have a very close eye on what's happening in the P&L of a particular company.
Okay, and finally, Abhimanyu, the balance sheet. And I think, in these times, in these crucial times, especially in the last couple of years, I would say, not even, months, I think that one important factor that a lot of mutual fund managers as well do tend to look out for is the debt on, the books, and that's reflected in the balance sheet. So just like you saw with P&L and cash flow, how would you advise retail investors go about, reading the balance sheet, the annual balance sheet?
So in the balance sheet, I think so the first thing that one needs to look at is, are there any intangible assets which are there in terms of goodwill and all? So, and whether that is a truly reflective of what the company would have paid when it would have done an M&A deal. That is one. Second thing one needs to look at is whether there's a capex which has happened, but then actually there's a commensurate increase in sales. That also needs to be looked at. How much of the cash flow has been stuck in capital work in progress, and if someone is monitoring that it could be possible that a company has put in, say, 20% of balance sheet in capital work in progress for last 10 years. So obviously that money has gone somewhere and nothing is happening on that project. So a lot of those kind of, and depreciation also is not getting charged on it. So those kind of details one needs to look at. One needs to look at how much of money is given as an intercorporate deposit to one of the group companies. What is the value of investments which are there in the balance sheet? Is these investment right now worth the amount of money which have been mentioned? On the other side, from a working capital perspective, how are the debtor days moving? How are the inventory days moving? That is something very critical to know. What is the kind of liabilities that the company has, and is there any liability which is there in the contingent liability? So I recall, a footwear company where interest cost normally used to be around 16-17% to the debt value. So the way they were structuring the deal was, there was some kind of an agreement where they had to pay the interest cost, but the debt was not there in the balance sheet of the company. So I think so that kind of intertwining is required to be done by the investor when he's looking at that particular balance sheet. Just a point, whenever we are looking at any of the things that we mentioned, we obviously have to look at the history of these things. So whether it is the management discussion part of it, whether it is the chairman's speech, whether it is a P&L balance sheet, has there been a very drastic change in some of the numbers which come in terms of percentages or in terms of the language which is written? I think so those are also very critical thing to measure when one is looking at an annual report, because that really helps us in knowing the credibility of a company in terms of how historically they have talked about the company and whether they have walked the talk in terms of delivering of numbers. So that also we need to figure out when we are looking at it. Obviously, the notes to accounts, the auditor's statement also is very critical. That if there are certain elements, say for example, some subsidiary companies are there which are not getting audited by the auditor regularly, how much percentage of overall business is that? So a lot of those kind of things also needs to be measured up by the analyst when one is assessing a company.
Great, very comprehensive, and I hope our viewers also understand that this is just a few things that Abhimanyu has pointed out. If he has to do a thorough study, I think he'll need a couple of hours really to sort of break down everything that you need to check on in an annual report. Plus, it also depends on a case-to-case basis, on an industry basis. I mean, what you would check perhaps for a bank, you'd not want to check for an IT company or a pharma company, etc., etc. But Abhimanyu, really appreciate you joining us today on this very informative and educational session for a lot of our viewers. Thank you so much once again.
Thank you.
And on that note, we will take a very short break. Don't go anywhere.